Good morning and welcome to the Breakfast Club. My name is Darren Hancock and it is November 12th, 2024, the day after Remembrance Day. I hope you all had a great Remembrance Day. You remember all the people that sacrificed themselves for the sake of freedom. Doesn't matter what country you're in, people fought for a cause, right or wrong. People died for belief, for supporting a value or a belief that the country they were in stood for. So anyway, remember all our fallen soldiers. So I didn't have a show yesterday. So with all here today, just keep in mind that after yesterday, a lot of people are trying to pile back into the market after a hiatus. So be careful. It could be quite choppy today. Usually wait the day after a holiday. So what are we looking at for NASDAQ? On the hourly basis, we're at equal highs, equal lows, and we're sitting just over the equilibrium or midpoint of the range of this consolidation we've been in for a few hours now. If we look at the overall chart inside, I don't know why it's doing this. I'm going to move to a different chart. No idea why it's doing that. I've got one side going up and down, and then this side here going up and down. It's split, so I don't know how to get it to unsplit. I have to wait for RS to pop on again and give me some advice, I think. So I'm looking, I like these equal highs. Let's go in here for the 1 hour chart. Let's have a look at this. We have relative equal highs above us. I do like this. I'm going to put a box down here. Good overlapping rays here. The Bissy. There's a gap right here as well. So I think initially that's, you can see how this has become the resistance right now. I want to see us use this to get some more leverage on and go higher. If not, look for these candles here to get some leverage to push back up and deeper into this range. Timmy 28, good morning. On the daily chart, let's have a look at the daily. We've just made a new high. 121, 353, 350, somewhere around there. I think it was I have 340.75. So we do run for these old highs here. We'll look at half that wick at 295. So we'll go back to the hourly and look at 295. So 295 up, that would be half that wick right on the daily. So if you're looking at half the wick, that would be a fill of that fair value gap and a return to this consolidation above us here, 295. That should give us pretty much a fill of that fair value gap. So if we can get up on top of here, look for a run back up into that fair value gap above you. And let's look at yes. This was a nice reversal yesterday. Took out this low, returned back into that order block, and we continue going lower. Got pretty choppy over the last few hours of the day. So now we have a reverse going on here. We've tapped back into it. Now you want to see these highs get taken again. We're in the same situation in ES as we was in NQ, as we were in NQ. We want to see this high get taken here before going higher. We have, what else we got here? Dow Jones. Dow Jones has not broken that high or that low yet. Staying right on that. If we close above here now at 44,471, on a close, look for a return back into the consequent encroachment or this yesterday's or the daily fair value gap here. You turn back into this, push higher, you're looking for new highs still. I like to see this even close above here and pull back into this range. And consequent encroachment of that's right around. No, it's a little higher than that. So if we get a kickback off of this candle's high and down, look for this to go higher. That closes above there right now and uses this fair value gap as support to go higher and take these highs. That's what I'd be looking for on the hourly and Dow. Good morning, Hadi. Back's feeling a little better today. Thank you for asking. I always take my vitamin I. Out of a better bed. Once you got a better bed. I found a foam topper here. One of Carla's relatives gave us a foam topper for the top of the bed. Oh, it's awesome. So I've had 2 nights of pretty good sleep. I don't see anything in here yet. Here, I won't see anything in there yet either, I would assume. Oh, we've actually got a reversal going on here in euro. Looking for that to go lower now inside this range. If I was going to put a carrot in here, I would put a carrot down here. And if we break this high, then the carrot goes above here. You don't want to see that box get taken to the upside. If not, carrot is here, and then the carrot will come down to the next box down here somewhere. So I'm looking for in the euro. Oil, man, that sure dropped. We have the reverse. Nice, beautiful play off of that on the hourly yesterday. Or back on the 8th, I guess it was, last Thursday. And now we've got a run higher inside this range. It's pretty choppy on the 1 minute chart, so I do like the idea that if we get above 68.76, we start getting above this high here and using it for support to go higher. It's rather choppy in here right now. It's quite high resistance, not clean at all. So I'm gonna wait for a cleaner moment. And we have Bitcoin. I was a little shocked. Look at that. Bitcoin made it to $90,000. Insanity. Like just over the last week, it's gone from 66. It's gone up almost, I guess, $24,000. It's insane. People who own Bitcoin are just chuckling away here, loving it. So we have, back when it was $3,000, it'd been at 67,000 and then dropped down to 3,000. Everybody thought Bitcoin had crashed and it was no good anymore. And now look at it. All those people who said no and they thoroughly believed in it, they're laughing now. They're wizards, or at least thought of as such. I still don't understand Bitcoin. But anyway, you've got your reversal going on right now. We've broken these lows. We have a nice break in structure. Return back to this order block here, and we're still going lower. So I'm looking at lower prices now, back into this range. So at least 50%. If I was going to put a carrot in here, I put my carrot down in here. Look for the carrot to come into here. That's where I'd be looking. What do we have here? We have the gold. This is what I'm looking for in gold. I'm looking for gold I'd like to see gold trade below this close below here today, so somewhere down in here. Then I'd like to see a reverse back up into this fair value gap and this box. If we can just come back and tap that box, even if it's today, tap the box and then go lower. But we've already run out this low, so you got to be careful that we don't start running up deeper into this range. If we go higher, then yeah, I guess we could come all the way back and fill that. You have to look for a lower time frame premise. I'd like to see it just come back, find support inside here, and then go lower. I wanted to see that before we hit that low, but now we've hit that low. This still becomes the potential for a swing to go higher, back up inside that range again. So keep my eye on that one. TSX, good. I didn't notice this. I had this sitting up here, looking at this going, oh, have they froze this for a while? Then all of a sudden I saw, ooh, we broke up way up higher. So that's good. I like to see that. We're going to see, I really want to see this start pushing into this gap some more before revisiting down here. So we'll see how today goes. I don't want to see it come back into here yet. I want to see that just continue pushing higher. I was looking at the option chain on this yesterday. And the option that chain, they were looking at this getting up to 15 some odd dollars before Christmas. These are all a bunch of different stocks. I haven't really done a lot of research on. I just added them. They're American stocks that provide dividends. They're one of the best dividend yielding companies out there. Curry Fishball, welcome this morning. Welcome, welcome. RS, there you go. Maybe you can help me with this. Why is this doing this? RS is my tech guy right now. I've got one side moving up and down, and then I've got this side also moving up and down. I don't want that side. I want them together. What did I do? How did I screw that up, RS? Tell me. Am I sick? No, I was just I've got after all my spine surgeries, my back really hurts. So I had a rough couple of days. Well, a rough 3-4 days. I can't stand up too long. I was at the memorial service yesterday. It didn't help either. Standing there for a few hours. It's really hard on my back. How do I treat such gaps in this here? And how do I treat those? Well, they're like any other fair value gap, right? Price tends to want to come back and rebalance those. So I was hoping it would be rebalancing this first. When you look at the range that we're in right now, RS, from this high to this low. We're just over 62%. So we're in a premium part of that range. So we could drop easily back into the discount range here. And then when you look at these two order blocks, that would be ideally where I want to see that just react off of that. If we're really bullish in gas all of a sudden, I want to really see that start getting some momentum and get up through this gap here. Usually want to see it balance these gaps first before leaving, or if it leaves them open and they continue to climb higher, it's more positive for obviously a bullishness. So in order for that to happen, I want to see these candles here get taken on the upside for really excited bullishness. I'd be a little more content with that. But eventually you'll see they always like to come back and fill them, create another gap, come back, fill it, come back, fill it. And now we've got all this in here. This isn't so bad considering I bought this at 12.56. It's up like 8% already in a couple of days. But anyway, we want to see this start climbing up into here. So unfortunately, they're hard to do, especially when you got one in the premium range that you're in already and one in the discount range that you haven't even hit yet. This is your line in the sand. You want to see that hold price at 13.44 and go higher. If it does start running back down, then you're looking for a return back into this consolidation once again. You want to see a portion of that to stay open for a breakaway so it can start running much higher. That's how I'm kind of looking at those right now. Wolf trades, think you have them on different panes. Different panes. How do I get that fixed then? Is there like a... I don't know. I end up deleting the whole box and starting over again. I tried to compare different boxes and look at where I'd adjusted my configurations for the boxes and didn't see it. But try clicking the chain symbol below the I symbol. Clicking the chain symbol. This one? Nope. See, the AI is down here, and this US dollar, which is usually sitting way up here. Look, I thought if I pulled it all the way up, then it doesn't change anything. It just squishes this box out of the way. If I put it at the bottom, then I don't know. I can always delete it later. It's not a major one I'm looking at. This over here is the important one. Anyway, let's get back to the Canadian ones from my little Canadian friends. Some good dividend stocks. I do like the idea of getting down to 29.26 for this Linden Gold Transalta. That's the pipeline. This came all the way back into a nice little discount here to go higher, take out these highs. This was really nice. And we closed above it right there. So you can see even in this Gecko communications, it's still is algorithmically driven. I know nothing about this company, zero, and I know nothing about any news release for this company, but I do know algorithmically, if you look at this fair value gap below here, right, we ran up, that validates this as a potential inversion. So if we come back into it to go higher and take out the high, we've got our inversion. So we've got reverse. You don't get a chance to get in on it. You run all the way up through here, extend the range, come back down, run all the way back into here again, run through this level one more time, come back, find support at it, right inside it here, and then start driving higher. Take out those highs. And we've got the same thing happening here. See this imbalance? So you take that imbalance, fair value gap, imbalance, fair value gap, all of this down to here. You return all the way back inside it. And now we've run back up through this level right here on the close. Opened up above it. Now we're going to extend the range. So you're looking for these equal highs to get taken out in Brookfield infrastructure. So algorithmically, it still runs the same. Good morning, Campione. So have we got anything in here for... I thought I had a whole bunch of different stocks in here, like all the wheat and gold and all that other stuff. Where did they go? Did I delete that? Sometimes you get one of these charts and you end up... Clearly you can tell I'm almost 60 and I'm screwing up my charts. Abs, good morning. How you been, buddy? How you feeling? Haven't been here with you in a while. I see you're starting earlier. Hope your back is feeling better. Yeah, it's feeling a little better this morning. I started earlier today because I'm heading home tomorrow, and we have a slight difference in time here. So before everybody gets up, I wanted to get into the charts, doing a little bit of looky-loo, see if I can catch something. I caught a couple of earlier trades. And then I'm moving to the sidelines because I haven't been able to really focus on this while we're visiting family. So by the time when I get home, hopefully Thursday, it's going to take me a day or so. It's a 13-hour drive to get home. So I'm going to either split it up into 2 days, but either way, I'll be here for Friday. I'll have my regular computer and I'll be able to look at the charts a little cleaner. So now there's the relative equal highs that are taken now. Now I'm just looking for a reversal, break in market structure, and see if we can't get back down to these lower levels on the, looking at the hourly. See how the hourly is, we got, there's a small little reversal going on here after we've taken out these lows. There's a small little reversal here. So if we return back down into here, which would be like to take out all of these lows one more time and get back into this level, then go higher. If not, if this continues to drive higher, look for these highs to get taken out. Now that got these relative equal highs are taken, body closes above them, comes back, finds support. Looks like it's going higher. Looks like it's going higher. Juice. Good morning, all. Good morning, Juice. Wolf trades. Hover bottom right of the pain chart. Hover bottom right on the pain chart. There should be 4 icons for settings, views of the pane. Is this the panes over here? No, object tree. Oops, now what did I do? I don't know what the hell I just did there. Come on. I can't even get that stupid thing to. Where's my pain thing again? Crap. Sorry. Why is it having trouble grabbing my... That's what I'm looking for. I'll leave it for now. Thanks, Wolf. You can move it up to the existing plane, delete, minimize, or expand the plane. I'll figure that out when I'm not live. Thanks anyway, Wolf. I'll look into that. Do you have an indicator in that pane? You can try this. Click on the drop down indicator. Move it existing pane above. Ah, you're a genius. I just grabbed it and moved it, and all of a sudden the whole thing's working now. I'll take it. Thanks, RS. Your volume is very low. My volume is low. Can you guys hear my volume? I've got it maxed out here, so sorry about that. I'm trying to be quiet while people are sleeping, so it's not bad. Not so bad for my father-in-law because he wears hearing aids, so he doesn't hear me. But my wife's in the room next to me here, so I'm trying to be relatively quiet. So I apologize for that. Yeah. So what we're looking at now is we want to see if this candle gets taken to the upside. I want to start running back into this range and see how that goes. Buenos dias, Edgar. Buenos dias. Click the underscore symbol on the top right. It's okay. I think I've got it sorted now. Pain is where the candlestick is. I think I got it sorted now, so it looks like it's working okay. I'll stick with that for now. All right, so keep that in mind for this. We want to see that get above. Oops. We want to see this get above the 1 hour high here. That menu you just had, it's the move to. All right, so good morning, Craig. So before we take this high out, I'd like to see us return back into this fair value gap below us here, the SIBI on the hourly. I'd like to see that come back into there first. I do not want to see it trade below 184. Not even on a wick do I want to see it get past that. So we've got a fair value gap here. we get a structure break here. Then we're looking for a run back down into these equal lows below us. Our target right now is these relative equal highs and this hourly fair value gap sitting above us here. That would be the new week opening gap again. We'll be digging into that new week opening gap. If we can get through that, use that as support to push higher. We're looking for 288. So that'll be another 60 handles from where we are right now. If we can get down into here, that'll be 100 and somewhat handles, 111 handles. We can get from here for another reverse run back into here. So a few things have to happen. First, we have to get back into here, see if this is holding, and then we have to break market structure to the upside to confirm that we're going higher. Keep in mind, we're the day after a holiday, so there's the first little indication we're going lower. So usually when we say, I want to see a break in structure to the upside, and as soon as we come back and trade into it, which is on this candle here, we're going higher. So now you get this, and you see the reverse starting to happen. You got this whole cluster of candles here. You want to see hold price if you want to keep going higher. So if we see this candle get taken on the downside, we got a slight change here. We got a small little fair value gap here, a SIBI. If I open this up wider, you'll see it. See it sitting right there. We have an imbalance sitting here. So if this candle holds price, which is what you want to see it do right on the close, right there, perfectly. Now you want to see that continue to push higher. And if it gets through this level here, once again, at 225, keeping in mind, you want to see that fully close and use this for support to go higher. If not, this is just returning back into this one to go shorter. So you're stuck between going higher, going lower. Pull the range here, you'll see you're already at 50%. So which one do you look at? It's a gambler's paradise right now. You can click the button in either direction and potentially hit pay dirt. So until then, you just kind of sit on the sidelines and wait. We're coming up for 9 o'clock now. So ideally, you want to see, I would love to see us get back into that range and then 10 o'clock run for these highs. If we take out those highs at 10, find support to continue going higher, then we got our SIBI above us on the hourly still. I'd like to see him use this one more time to go higher. Good morning, Derek. Yes, I'm feeling a little better this morning. Thank you very much for asking. Is my volume not very good this morning? Wait, let me try this thing here. How's that? That's probably just turning up the volume for me. Okay, what do we got here? That's the level we're presently sitting in now. And we've just been below it. I want to see this remain open if we're going to go lower. That's funny. So you can see how we bounced off of this candle here. That's typically the one you want to use to get above. See how we've closed above it here? And you use that to get some support. That's nice, perfect. Run up, extend the range higher, taking out these highs. And then you want to look for the reversal. You get the reverse right here. Now you want to see that continue back down deeper into this range. Yeah, I agree, Derek. We're looking right now. This is the first early indication that I want to get back into those equal lows, but you want to see these highs get taken out first. We are in the rejection. We have hit the rejection block already. So if we do turn around, we have to get market structure breaks for me to get back down into that level, though. I don't have any market structure stuff going on just yet. So that's the complete fill of that return back into that BISI here. Now you want to see this stay open now. If this is bearish, you want to see that stay open and return down again below this low here. If we close above it, there's your wiggle room right there to your fill of the fair value gap. It loses its luster for me when we start getting above or start running up back into this fair value gap here. I was hoping that half of that would stay open. So there's still a tiny portion of it left open here. We've just returned back into these two candles, the open of those two candles. So you always got the wick, the open, the mean threshold. So the wick is what's holding, or the open is what's holding price now, and we still have a little bit left open. We're still trading in the lower half of that with the bodies. This is what we want to see now. You want to see this get back down deeper below here and start using this for support to continue pushing deeper into the range here. Yeah, it's seek and destroy right now. It's not super high resistance, but because it does seem to be waffling just a little bit of time in here, but then starts to make a move real quick. Yeah, I want to see this start getting through here now. And then that little imbalance we saw down in here. And see if we can start pushing lower. 21,167. I like the fact we're drilling through these candles here now, especially this one. So we've closed below this one, came back up inside it, closed below this one, traded back up inside it. Now I want to see it close below this one, trade back up inside this, and keep going lower. Yesterday's 415 close seems to be 21,211. Identified it, if I've identified it right, just about where we are. What's our regular trading hour? Yep, 21,211. Not much of a gap right now. Right near the edge of this BISI we have here. See how we've just touched the bottom of it or the high of it? No, we're actually just a few handles short. So keep your eye on this level right here and see if we start taking out the lows, start getting some structure break here. We're just inside this range here right now. Morning, Russell. Hope your back is better. Thank you, sir. It's feeling a little better this morning. It's going to be a long drive home tomorrow, so taking lots of ibuprofen and Tylenol. I have that really strong OxyContin, which I try to never take. Very rarely do I have to take that stuff. So bad for you. When I came back from Germany, they gave me like a whole pharmacy of that stuff. I had to take a note or letter on the plane because I was packing so many drugs at the time. It's crazy. Morning, Charlie. Pretty good, thank you. So keep your eyes on this level right here, and we'll see how we act inside there. Let's go through some of these because I'm sure Craig's chomping at the bit to find out what's going on with this oil. So 15-minute, we have a gap above us here on the 15-minute chart. Regular trading hour gap from yesterday. Is that yesterday? Yeah, the 11th. No, Fridays. So that's a new week opening gap. That's Friday. Monday, yeah, that's the new week opening gap above us. Let's put this back to electronic trading hours. Yeah, Craig, if you can get above 68.78, which is what we're at right now, I'd like to see that get back into 68.78 again. We can come back into here. Just retouch this, leave this fair value gap open here. Like, leave a small portion of that open. I'm looking for that to go higher. Let's quickly look at Bitcoin. Carrots in Bitcoin down here still. Gold. So right now we're just inside this range here with gold. We're coming back to this order block. I like this. If we can see this climb higher here now that we've filled that fair value gap, I want to see this candle hold price and start pushing up for a break in structure for these relative equal highs above us. So our carrot will be right there. That's the upside I'd expect to see. If we can take out this candle on a close, like this high here on a close, then I'd like to see that run up and take these relative equal highs above us. And then that fair value gap above us here. Just want to make sure my volume is still on. Yep. I don't want to be coughing in your ear here. blow out some of your mics. Huddy is 21,206. $21,206. I like the fact that if we trade below this level here right now at 21,208 on a close, we just come back and fill this little gap we were looking at here earlier. Now we'll see if we get a reaction off of that and come back into that range. See how we're starting to get a little poke through it? You want to see it tap it right on perfection and leave. We could come down to rejection block, which is 207. Oh, Hadi's on a 15-second. Of course you're on a 15-second chart, my friend. Oh, oh, yes, 206. Correct. Well done. Yes, indeed. There we go. We've run the lows and we've closed below there. So now we're looking for that lower price. Come back, find support at that now on that 15-second chart. I can see that more clear on there. See that support here? Now you want to see that roll over and come back down. Otherwise, you got the potential for the reversal to happen, running for these equal highs above you here. So that you want to see hold and now extend the range. It did. It ran the range out a little further. Didn't start gunning for a heavy takeoff, but you want to see this here provide support now. You don't want to see it get above there. If it starts to run above this old high here, and these highs, then look for a higher run into the range. So watch for here. So now we've run this little high out here. Come back, give it a little kiss, push higher. Can run all the way back down into this gap right here. So watch that level. So you're inside that order block again. Right on the open, or the close. Now you want to see if that goes higher here. Let me make this a little bigger for you. Now you want to see this a portion of this stay open so it can go higher. And again, you're running for these equal highs above you. Again, no break in market structure really yet. Somebody might argue that, but you want to see a significant structure break. We're just running back into a consolidation cam model 1 entry, continuation on the downside. Back to our 1 minute chart again. You'll see how we broke through here, fair value gap, closed below it, come back all the way back up inside it. Wicks did some damage. The body was right on it. And now we're going lower. Look for this low to get taken again now. So we have got our structure break now. As soon as this one closes below here, we got 10 seconds now. You want to see it close below here. And we get a return back up into 207. That's a run lower. Watch 204. So you always watch as we've now taken out these lows here. Kind of keep your eye on this level here and think, does this now become the swing for another reversal back into this range here? Or are we aiming for our carrot, which I would put down? I'll put the carrot down in here. If we close above this level, look for another potential run back up into these relative equal highs. And we're back into this range again. And we can run all the way back to these order blocks here. Before that, I consider that running higher. It's all inside this cluster right here. The fact that we've actually now closed, have we closed below that level? Nope. Just watch that keep coming down, aiming for here. You might get your double lows yet, Derek? This is going to give this a different color right now. You want to see keep coming down below that level there. Just ran back up to the high of it. That's fine. Right back into this candle here on the low. Now you want to see that get some strength here now and start driving through here. And using this as support now to continue pushing for the carrot. Oh yeah, it's too. Don't even think about jumping in yet, buddy. That would have been your opportunity to catch just some short runs inside this range here. So now I'm looking for this to run back into there. See, now it's closed below that. I like that. Nice. Now I'll start driving down lower, coming towards the carrot. Once you get inside this, we're through this range here, then I'd like to see that start running for lower lows once we get through the carrot. And you're right, it's too close to 9:30 to be chasing anything here, especially in the discount portion that you're in already. Keep your eye on the carrot. That carrot, we can go all the way down to here. I should make the carrot the actual size of the box I wanted to see it come into. Makes it a little more challenging when you got to try to do that though. That should be close enough. It's going to hit the carrot. So again, if we start driving above this level now, then you're looking for a run back into that range. It just came back into this candle's close, or it's open. We can come back and retest this level. I like that candle's open is holding price. Fair value gap here, the SIBI, come back, rebalanced it. I want to see if we can get some support off of here. Mean threshold of this candle. Should see it roll over here and come back down a little deeper. There's the retap. It's running a little higher than I expected it to, so mean threshold now. Doesn't mean threshold hold price. If we start to eat through that, all three of these, usually your bud is next, as Michael would say. One candle eats through three arrays in one candle. Whatever one's sitting behind it is next. So we'll see if that is true for this high. And it is. So now we're back inside this range again. Look at this candle's high. You want to see this stay open here now, and this. Find support in here. I guess you could come all the way down to filling that fair value gap. That BISI here. You have relative equal highs above you. Right there. You see that go higher. All the way down into here. 21,202. Small imbalance here. So the question now, Derek, is do we take out the high, these relative equal highs before going lower? I think take those out at 10 o'clock and then start running for those relative equal lows below you. find support off this candle here. Good morning, honey. Got a chair in there? I'm just going to switch rooms here now. Everybody's awake. Oh, not interfering with everybody. See where we're eating through this. Again, you're on the other side of this. Back to our run back into this range, greater than 50% of it. Now we run through the other side of this on the downside again. So now you're back into bearishness. You ran out the low. So this is like getting back into that high resistance right before the 9:30 release. Well, there's no camera on. Can you grab my power cable there? Oh, okay. Here we go. Good morning, Edgar. Thanks, love. Should be better in here. Should be a little more quiet. Sorry, I'm moving. I'm gonna move my station here now that everybody's up. Okay, we're set. Okay, I've been trading crude oil on the long side this AM, but when you get a chance, would you review it, please? Sure. Keep your eye on the carrot again now that we're below that level. We've got a high taken, small little reversal here. Right, we've taken out that high, this little reversal. We've traded below it on a close, and now we'll come back up inside it. Now you want to see this come lower for the carrot. Let's go over here for oil. Keep your eye on the carrot. Oil, yes. If you're long in oil, Craig, I like the long in oil right now. Did we find a support off that level? 68.7. I don't know if I gave that 68.70 something. 68.67. Did I give that before here? The run down into that 68.67, and then it ran up there. I was trying to give you that back here. A nice little run back into that level here, 68.76. So if this was the return back into that level, then that's great. That's what we've been looking for continuation. I can't remember when I gave that. If I gave it to you after the fact, then that's what I was looking for it to come back into that level right there. So yeah, you're good, Greg. I'd like to see that get up into that's good. Yeah, I'd like to see that start getting back into 69.90. Look for this fair value gap SIBI above you here, all the way to 69.37 to 70.23. And always keep your eye on this stuff here. So every time a new one forms, keep your eye on that, and then think about the range you're in and how much you could be giving up if it runs all the way back inside that range, takes out that low, and then keeps going. So confirmation going lower would be here, and that would take you right back into the regular trading hours.
That's a regular trading hour gap you see right there. It's just opened. So if you do get a run back into 50% of that, that's right inside that range there. And you want to see that candle get taken on the downside if you want to see the rest of it fill. You're in and out 3 times already today. So no carrot. We're back through this again on the other side. Welcome to high resistance. We have a structure break above. Come back, find support at this. There's the open. Nice. Now go higher inside this range. Now you've taken out these highs. You got a small one here. If you take out that low, look for the carrot again. You got to be able to get ready to switch up on a moment's notice within a 1 minute candle. You could be changing your mind. So if you're changing your mind as many times as we have here, oh, we're going low, oh, we're going high, going low, going high, then you're in that consolidation and you're just getting beat up. So, and you're getting into 9:30 now, like Derek had said earlier, it's too close to 9:30. So there's the upside objective right there. That's it. So if we do take out those relative equal highs above us for 10 o'clock, and then the reversal for the relative equal lows. Pulling that larger range from high to low here. You've traded way up inside it, hit the premium. See how we hit the premium there and we're traced all the way back down to the discount. Hit them both all in one candle. Derek's like 69.90 is my target for oil. 69.90. Yeah, that's a good goal. 69.95 even. Ooh, 69.75. Keep your eye on 69.75 as well, Craig. Good morning, Zach. Oh, there, the carrot is being eaten. Now you want to get on the other side of the carrot. Done and done. Had to run all the way up into that premium range first before finally busting through here and going lower. Again, how are you going to call that? We called it both directions over and over again. So that carrot's done. That's when you start getting into these high resistance situations. All right, so now we've got the range been extended here. I want to see whether or not, yeah, see it's just ripping back and forth. I wanted to see if this held price inside the carrot. So now we'll move the carrot for the equal lows below us. Come back all the way inside this carrot here, or sorry, this cluster here. Look at that. All the way back up into the premium level and wick through it. Boy, wicks are doing some damage this morning. See how we keyed off that level again one more time right here. You see that one at 69.75 there, Craig? That old low. Just kind of keep your eyes on that one. And again, every time you look for those objectives, like the fair value gaps, the SIBIs on that side and that low, kind of look for an opportunity to see these reversals forming like this, where you say, okay, now ideally that's the perfect place to get short off of there, and your stop loss would be sitting above you here, and you wouldn't want to see it. Your wiggle room would be the total fill of that fair value gap and nothing more. But that would be your ideal short. That way, if it trades above, it comes to it, you can get out and get realigned with price action. This is a nice little seek and destroy. Did that take out those lows? Literally sitting on equal lows right now. Clean out the highs. I'm going to watch here now because this now becomes important level for me. The fill of this, if we return back into here, I want to see if this provides a level of precision and starts running higher. So watch for 21, 21.4. We drove through it, come back, find support at it, extend the range. Just a price action study right now. Now we're back to 21.30. See if 21.230 provides some support. Get this thing to stop sending these bloody notes. I've tried to mute them, but they're not muting. So we traded above that candle, that high. We've come back inside that candle's high and this candle's high right here. Hit it nicely. You want to see that start to really accelerate here now. We didn't get back. I was looking at these two here because this one's body's higher. 21.30, 21.230. And 21.29.5. It's 21.230. First fair value gap. See how I gave our first fair value gap right here? It opened up. Now we're going to come back and tap it one more time. Now what I'd like to see is that, yeah, no, I still want to go higher. I'm looking for that, these equal highs here. This weekly fair value gap to go higher. Look how close we were to what we were calling a while ago. See, when last hour we were looking for it to return back into this level here first before going higher, and it's exactly done that. It just went a little bit lower than we were hoping for. I said I did not want to see it get below 184. I just want to see it tap it and get out of there. And it just went a fraction lower, 180.75. Yeah, that would have been the low right there. You don't want to see it get lower than that. It hit it. Now if we use this level of support to go higher, see if we get into filling that fair value gap here and then keep keying off of that to go higher. Because we're still inside that first presentation fair value gap right now. And this guy here to go higher. Oh man, okay. I gotta get in here and shut this down a bit here. Mute notifications for 3 days. So those are the first clusters inside that range. The next would be this one here. What's our UNG doing, Craig? No, I don't want to see it gapping down. I want to see it go back up. I want to see that keep going up. Looking for upside in gold still. Oh, perfect. See that? We were looking for the last hour to close above this level. It did. Came back down, found support at that. Perfect. I want to see that keep driving up through here now. On a close above here. Now we've got a nice little run from here to here. You want to see a body close above that. What did our euro do? Euro came down to our candle, a little carrot, finally hit it down here. Hit that objective, and now we're starting to go higher. So our carrot was hit. Choppy. It hit it though. It's eating right through that level, closed below that low. We're using this first presentation now to go lower inside this range. There's nothing inside there that, to me, all we've got left is this order block down here. And potentially this guy's already been used though, abused, tossed aside. See if that still gives us any level of support. We're back into a discount, a nice discount inside this range. Got nothing inside here that warrants a support other than from here to here. We have that Tuesday's 9:30 volume imbalance. today's volume imbalance right here. So we could see it come back and tap that. That's probably the consequent, or sorry, the mean threshold of this breaker here that takes out these highs here. So usually you want to see a breaker hold price either at its high or its open and then continue going higher. So it loses its luster. We're back into this range again now. And that line in the sand is the mean threshold. If you lose that, which is pretty much near this volume imbalance here, then we're looking to go lower. You're long in silver from yesterday. You held it overnight. It's a bold move, man. You hold anything overnight in a market that's poised to do some real crazy trading. You have a black swan event. I remember the black swan event we had in 2016, 2017. There was a black swan event in British pound. Holy smokes. That just hammered down. It's like 800 pips in like 1.5 minutes, 2.5 minutes, or something like that. It was crazy. Last level still holding price. That would be a nice, decent return into that range. We're below 50%. 62% puts us right here, right on the fill of that inversion again. If we get on the other side of that, then I'm looking for the mean threshold at 88, and then the carrot. Brexit was the first one I saw as a trader. It was amazing how crazy those black swan events. And we're poised for another one, right? Markets have been so inflated. It makes you wonder when we're going to get the next big one. Everybody's been talking about this. The sky is falling. I've been calling for a correction for banks. I don't even have any banks on here. I don't see why that's. They're all gone now. I had them on here. Bitcoin, yeah, they used to be all on here. Probably deleted them. Bodies are still held on that. Well, that's right in the hourly, so I will leave this one. That's right in that first presentation. Oh, thank you, lovely. You rock. Thanks. I could get used to this. My wife retired, bringing me a coffee. Got my mom bringing me coffee when I was out there, getting spoiled rotten, you guys. Where's your first objective there, Derek? Where do you think she's headed for 10 o'clock? Yep, golf's looking good about now. This is that typical after a holiday. Michael talks about how markets can be quite high resistance and all over the place. Everybody rushing to get back in and get orders in. Uh, kind of skip over today and wait for tomorrow. You see that, Craig? When we were talking about this level right here. See how we've traded through it? Then you go, oh, we're coming back into this range again now. And you came right back up into that to give you an opportunity to get short inside that range. But then you're looking at this and you're thinking, if we trade above this, we could get back into running for these highs. But we didn't. You see how it just traded back into that level? Traded lower. Now you're really deep inside this range. And this is a time where you say to yourself, take your profits as soon as you see that happening. And we were talking about that just before all this happened, that was the possibility that you could lose all your profits if it ran back in there, which is exactly what it did. But it did give you the indication of, hey, look, this is what I plan on doing today, Craig. Here, take your money out of here quick before I destroy your profits, just so you're aware. Keep your eyes on those things. So you're right back into this candle here now. And now you want to see it break through here on the upside, get back into this range and start clearing out these highs before you go higher to that original 75 we're talking about. So it's a nice opportunity to pick up a discount. And your stop would have to sit below this level here. Because if you take this out, then we're breaking market structure, we're heading lower. So if you're inside this range, quick little snatch for some profits inside there. If you hear my mic go dead every once in a while, it's because I'm eating and I don't want to chomp in your ear. Smart move, Greg. See how we have this again back to the first fair value gap initial presentation. We ran through it back inside the range. Go right back through it again. Find some support at it. You want to start pushing higher now. You want to take out these relative equal highs above us and start digging through this weekly fair value gap we mentioned, the new week opening gap, and start using it to go higher. Now we could run through it, come back inside it, and find support at this consequent encroachment of this, which is relative equal highs again, to start going higher. And all the way back to the closes as well. So I'm kind of like looking at the next hour for this to run up back up in here and get a retracement and then start pushing higher. So Mr. Carrot is way up yonder now. That's where my thoughts are leaning right now. My take profit hit when hit the equals highs. So Curry Fishbowl, you're all done then. Tempted to hold until Asia buy side though. Just take out the lowest hanging fruit. Always take low hanging fruit. It's when you start to love the fruit on the tree, you want to start going for more, right? The lack of conviction the market has today seems appropriate given no news and news. Items are tomorrow and Thursday as I see it. Breakfast time, maybe late morning, I will make a move somewhere. Oh, Asia highs hit. John Sanner, thank you for these live streams. You're very welcome, John. Sorry we're getting you. I keep switching up my ideas over and over again, but I just want to say I like to stay on price action. And yes, I will change my mind up, down when I have key levels that I'm looking at. So you have to forgive me for keep changing my mind. But as soon as I see that, all right, we're breaking a certain level, got to change your mind again. You want to stay on the horse. It's not of my indecision. It's the fact that price keeps switching up, and that's why you get this high resistance stuff where it switches, and you just got to try and stay on it. So we're back to that initial first presentation again. Bodies are respecting it. We've come back and filled this fair value gap, but we have not traded below it yet with a body. You see that? So you want to see this continue going higher. "10 a.m. news coming up shortly." Kevin, first time here, long time low key trader here. I like what you're doing. Well, thank you, Kevin. I hope you enjoy yourself. You can subscribe. Anybody's new, you can subscribe for free. There's no cost to subscribe. There's no cost to hit the like button either. It's all cost-free stuff. Everything's free here. Free like buttons, free subscriptions. Man, we're just handing out the deals today. Every day's a Black Friday event for me here. You're welcome anytime. So mean threshold is candle. See how that you want to get through that? See how it hits it? Bang. Tries to come up through it. You got to see it drill. Like now we're looking at that drill metaphor I gave you before, where you're drilling down into something or drilling up into something. You want to see it drill, drill, drill till the ceiling pops, and then it runs through the mean threshold of this. We do have this cluster. Michael talks about all three of these important. They are, but the last candle is the most sensitive candle. And that's the one I tend to focus on most. You are supposed to focus on all three, but I tend to put my greatest concentration on that last candle and what happens inside it. And I don't use wicks, I use the bodies. I know somebody said there was a news event coming up there. I haven't even looked at news. Hadi was saying there was 10 a.m. news. I don't want to show it, and I don't know if I want to get a copyright infringement on their channel. So look on forexfactory.com and see if there's any somebody can tell me what the news is going to be. If I go on here, you guys will all see it, and I don't want to get a copyright hit using somebody else's website. So is this high resistance or low resistance liquidity run right now? And how do you define that? Anybody give me a decent definition of that, according to Michael? Or what you would consider a high resistance liquidity run? FOM speaker Waller speaks. Gotcha. Do you mark the wick or just the body? For when I'm looking at the mean threshold, I just use the body from here to here. And that's how I look for my. Michael taught us that a long time ago, and it's just stuck with me. If he's changed his mind since then, it's stuck with me. It seems to work for me. So, if he's given better reasons for using the whole wick to wick, then, if I use, let's see, we use the wick to wick and see if that makes a big difference in that candle. So no, we use equilibrium, doesn't hit the equilibrium, but if I use the body from here, right there, and there, see it hit it? Boom, right on it there. So that's what I use, body. I don't use the wicks. It's just a teaching he gave us way back when, and it's stuck in my head, so I ain't changing it. It works for me. If he's got better reasons for it, it's not working for me. That old way, I'm stuck in my old ways here. That's what he taught me a long time ago, and that's what I'm sticking with. So that mean threshold of that candle held. We broke through this level right here with a body, we came back, we traded into it, and we kept going lower. That's the reversal you're looking for. Now we take a break in market structure to the downside. We want to see if there's nothing in here. That we're back to this guy again, right? If I pull him straight over, so we traded below that one as well, came back up inside it. Yeah, we did a little wick through it, and now we're looking for an extension. This is the guy. So if you're going array to array, I'm expecting this mean threshold to give me some sort of reaction. So if you pull like array to like array, all right, here, let's see what kind of reaction. This is one of those little price action studies we can do here. We'll see what kind of reaction we get off the 50 here. Because if you took all of them from wick to wick here, we're already well below 50%. If you took the wick from there to there, if we took the wick from there to there, you're right on 50%. I just want to see what happens here. Box to box, like array to like array, inside a range. 50% would be your level to see it react off of that. Now we see how we've traded below this level. Remember when we want to look for a reversal, and then you look for the breaker that stimulates the reversal, or the candle that starts that little run, whether it's the last up close candles that you want to trade back into to go higher, or the lowest down close candles that you want to trade back into to go shorter. So see how the bodies are trading below it here. We're well below it here. We traded back up inside it right here. Now we're going lower. We hit that 50%. We'll see where that ends on a close in the next 10 seconds or so. So that would be the out if you're going from array to array. Now you want to see it close below here if you want to expect it. See it's closed below it. I'm expecting to see that run lower now. You could run all the way back up into this cluster here. But I want to see that take these lows out now. Let's get rid of that guy. And here's your breaker here, from here to here. And then you've got the close. So if we did come back into here, which I wouldn't expect that we've worked it enough times here now that you finally ran through it, came into it one more time, into that breaker to go lower. Now we're extending through because that 50% was taken. So I hope you guys can see that as well. I think it's just a Fed speaker. Come to the carrot. Where's our carrot, by the way? Is it still down here? Or is it up higher? Oh, the carrot was higher. Got to be prepared to keep switching up our carrot. We got all these equal lows below you here, and the carrot can come into here. It's already in this level right here. I do like this one here to here. Yeah, if it comes in, I like to see it hit the carrot again on the downside here. We've cleaned out all the liquidity here. We have not cleaned out the liquidity here. So we've taken these two lows, so we could see a measure of retracement back into these candles above us here. Pull your fib tool on the range and watch for 50%. See what that, quickly see if there's something that lines up with that 50% level. Oops. There's 50% there. 50% brings us right back into the regular or the first fair value gap presentation, and it still keeps us inside this breaker. We're coming back up to the breakers open or the close here. That's the first thing we want to look for there. 50% sitting right here on the equilibrium. Just popping over equilibrium will fill that fair value gap for us. We still want this to stay open. Otherwise, if it runs all the way back up into this again, then you've got that level there. And we've already, that means we're using the lows taken. Is this any gap right here? What's the open on that level? 92.12. The open on this one is 92.25. 92.25. They're the same. So there's over 50%. Back into that order block there. Right into the open. 62% retracement. Often trade entry reversals just above us for a fill. And there's a small little imbalance up at 75% there. See that? Now we've traded through this. If we trade through this on a close, we've gone from there isn't a discount array here other than this one here because we're below 50%. So this one to this one. If we get through this one on the upside, look for further continuation. Again, back to see how seek and destroy. We're back into that running higher for where the carrot was before. I'll put another carrot up here. As soon as we get through that, see how, look at that. Look at that, you guys. See that close right there? Literally closed on that level, opened just slightly above it. We're coming back into it. All the way back down to initial presentation. And then you go higher. Anywhere inside here for continuation to go higher. And then you want to see these two candles get taken and find support. And then eventually these cluster of three here to get support above them and go higher into the carrot. High resistance is when PD arrays are not respected. Yeah, or they hang around inside those PD arrays way too long. That's right, Curry Fishball. So your high resistance liquidity runs when we stay bouncing around inside these levels, or they're not respected. In that, if we just hang around inside them, you want to see them hit them and quit them, get out there quick. So if they just linger around in there, that's all high resistance stuff. You want to see your PD arrays get hit. Once you understand them, you want to see them hit quickly and leave. You don't want to see it. See how we're back into this level? You want to see it just tap it inside here all the way down to that level right there, which is inside that first presentation. And we're at 75%. See that little imbalance I told you about right there? We just filled it right at 75%. So if that turns into an option trade entry reversal and it starts to run all the way back down and take out these lows, forget that carrot there, right? So that's the level you don't want to see it trade above. It does, just opens up, comes back, taps it. You want to see it leave. We have a small little wiggle room above us, which is that imbalance I mentioned. And now it said, okay, that's all I needed to come back to. Quickly rebalance that little imbalance there and start to run back down into the range again. We have another fair value gap here. Now becomes inversion. It's filled, ran through it. Now we're running through this one. So if you don't get that one, we're looking for this one. You're already into a discount range inside this small range here. So do you want to start taking this one to get short when you're already in a discount? No. And we're back into that guy again. See that? See that level is still providing a level of sensitivity there. So now you want to see it come back up into here. Find some support off of this and go lower. If it runs through this, then you want to find support above that, go higher, and then use this last up close candle to get some leverage into these guys. If it moves around the regular 5-hour up or down, I can't see no buy side. Look at the hourly chart. There's Simo. Here's your buy side. This whole SIBI right here. And you've got this weekly new week opening gap. We've just taken out the new week opening gaps high, and we dug into that. So that would be ideally all you need to do is just run up in here. I'd like to see it get some leverage, a body above this to go higher, but just that little run on that liquidity there, back inside this SIBI, we could see now, see how the wicks are doing some wicked damage for us here, back inside that range again. See that little 1 hour fair value gap? Went up, came back down, went all the way back up, and now we're looking to go lower. Oh, is that I can hear the alarm going off for 11 o'clock or 9:30. 8, 9. Oh, it's the 10 o'clock. Oh, 10, 16. 16, 17, 18. We're looking for the squabblers right back into that range right there. This is the silver bullet type time. When you get the 10 o'clock, there's your 10 o'clock. Some people would say silver bullet run for higher. I like to wait till the 16, 17, 18 candle. And here's the 16 candle coming back up inside here. Now these I like to call the second squabbler. So you got the 9, 10, 11, and 12, and then 16, 17, 18, and 19. One of those tends to want to make a short run high or low, like a little swing point, and then run down into a 21 minute swing point. Yeah, I agree. Sit on your hands. This is just ridiculous. I'm trying to stay inside price action, and you just keep changing your mind, going, oh no, we're going longer. Oh no, we're going shorter. Just because these tight little ranges, well, literally, this is a wild horse running around trying to flip you off, and you that's what we're expecting a day after a holiday, right? People trying to get back in the market, and you're going to get beat up in this kind of environment. Equal highs, yeah, but we didn't trade above them, so they're still available. Yep. We just got a little wick above them, so it's like a stop run above them. I want to see a body get above them too there, Simo. There are two fair value gaps above us, is ideal for which is ideal for the silver bullet. How do we know it will be hit or not? The one above us? Sorry, Curry Fishball. I don't know which one you're referring to. You're talking about this one above us here. You got this one here, and you got this one here. So you got one for a short, one for a long, another one for a short, and then you got this cluster down here. So you're inside the range. So there's no silver bullet that I would say is worth jumping in on, because you've got, here's your 10 o'clock right here. You got, there's your first official 1 minute uh, silver bullet, or that imbalance right there. That would be the first one, I think. Yeah, 10:01. That is a little imbalance right there. That would be a silver bullet. You got this opportunity here. You got one here, and then all of a sudden it reverses. It came all the way back into that first one at 10 o'clock. There's your 10 o'clock, 10:01. There's your imbalance. We came right back into it. Now we're looking to go lower. So this one here, if you're looking at I wait till 16, 17, 18. There's the 16 candle right there, providing your swing point. Back into our confirmation if we're going to go lower. and you're inside this range. So now if we take out this one here and that little guy right there again, we're still looking to go lower. So you always got to keep these the very first ones that come in to play, and then I wait till 16, 17, 18. Sometimes you get the best time. I was thinking about it as the hourly wick. The wick forms. If you look at open, high, low, close. If you're looking at an hourly chart candle or an hourly candle, that first 15 minutes usually forms uh, the wick, and then we start getting into the meat of that hourly candle. So I like to wait for the first 10 to 15 minutes and see what we get. And we got these consolidations here. We got relative equal lows below us now. This has all become high resistance now. So I expect to see us not take out those highs when you got that higher high. So you get that resistance, and now I expect to see that come lower. Back to the carrot again below us. This is a no trade zone. I agree. This is a steady price action. See if you can stay on price. And when it changes direction and you go, oh, I'm changing my mind, what's the place where you change your mind? Where's your support of an idea to continue higher or lower? And where does it switch up, and how quickly can you stay on it and notice when it's switching up on you, and not just going, oh, it's going higher and it's going lower. Give me a good explanation as to why it's going in that direction. Then I'll be like 100% support that idea. So again, we've got our imbalance. We've traded back up inside this one here. We've traded through it. We've traded back inside it right here and gone lower. Now we're trading through this level here, right here. We want to see it close below that and then take out that little SIBI that we've been seeing as a level of support. So I want to see if it gives us a little bit of a resistance here now. The fact that we're wicking through it's a good sign. If we can get through holding this candle on the downside, this inversion here, it's just a reclaiming that fair value gap on the downside. We haven't had any bodies trade through it yet, so we've taken out that low. We've got a small little reversal here, so if we get back up on top of that, you're looking for this to provide support to push higher. So again, stay on price action, see if so it doesn't throw you off. Like, don't commit to this carrot here or that carrot there yet until we see proof of the new direction, because now we're compressing. So I want to see this get above here and then use this for support to take out that high and run deeper into this range. To me, the hidden gem is at 21,167. 21,167. But I can't find a legit setup to get me there yet, so I probably will get this through the back door. Gray money trade. KGB. The 1002 and 1003 candle. Yeah, if you're using this one here, Curry, I like this for short. But if that, you can use that if you're still using that one there. You want to see it get through that to go higher. Same as this one, they're pretty much overlapping right now. Inside this range here, pull your fib tool from low to high. You'll find you're in a optimum trade entry reversal here. Watch that level. See how we've traded into it, through it, back into mean threshold of this candle right here. We hit that mean threshold. Now we're reacting off of it. Look for uh, right here, right now, this mean threshold. There's a small little imbalance right here. So right there, that's the little imbalance. So we do have the mean threshold right there. See how it hit it, react off it. It's a beautiful thing once you see it, once you can anticipate. I like to see that hold price, and then you're back up into mean threshold to mean threshold. So a small little range, that's what you're looking at for that internal range liquidity hunt right there. So now I want to see if this one gives way. Michael brings out the best in me. I think ICT once said, if the price runs around the first fair value gap up and down, it's HRLH. What's HRLH again? High resistance liquidity run. Oh, okay, that's it. But could easily be wrong. You're probably right, Hans. Holly's back. Hello, Holly. Is US 100 mean the same as NQ? Yeah, it's 100 NASDAQ 100. Yeah, Hans, he did say that. Hangs around the first February, wait until 10 and see what happens. That's no trade yet this morning session. See how we've traded through this level again we're looking for on a close. Now you're looking for these highs. I'd like to see this one here get closed now. Watch right here. Right off that regular first presentation again, and see if we can't see this candle here provide a level of support all the way down to 215. Sorry, 215.25. We've got a body above it now, so I'd expect to see that go higher. You want to see it get through this level here now to go higher. So 227. We're between this one and this one. 227. See it goes ripping through. Watch right here. 211 to 210.50. Right there. Now you want to see if this, it's got it. That's it. That right there at 211.10, what we just looked at. 210.50. Now you want to see if this level here holds. We have a little imbalance right here. A little, a little BISI that's been run through, come back, traded into. So if we snap off that and start dropping lower, you're really I'm just trying to stay inside price action right now. You literally came back to it here. So I'm stuck now between going lower and going higher inside something that's been compressing. So now you just gotta watch price. Try to stay on it. Keep studying it. Don't get bored and run away from it now just because it's not moving the way you want it to move. At least study it so that you can say, how can I stay on price action all the time? Stay on it. This is the best time, even though it's not a trade morning right now. It's a great opportunity to study it, look for the levels, line them up on your chart, and see if they line up. And if they don't, then try to find exactly where it did a turn on you. If you're not sure, ask. Someone in here, I'm sure, will know. Watch right here at 207, 207.75. I'll leave my lines on there. See where if it happens to reach down and through that. And then it's got to get up and through that little fair value gap above us right there. It's got to close above that if you want to go higher. See how we ate through that mean threshold of that candle already? So look for the next mean threshold, one candle above you. So now we want to see this candle here provide support. Got 2, 1, close below it. So now you want to see it provide support at that open. We're at 10:30 now. I can hear my alarm going off on my phone out there. Let me just go grab my phone so it doesn't annoy them. Okay, so this is the candle you want to see provide support at little fair value gap. You notice the next one above you right here is holding price. You're around that little high out. Wicks are doing some damage back into order blocks open. So I can see how you get tied up in knots here. You got this one, you want to see it go higher, so you want to see a body stay above here, come back into the order blocks, open. Now you want to see that push higher, or you want to see this close below this level, and then you want to see these lows get taken. Mean threshold right there. See it bounce off of it. Trade through it, look for the lows. You want to go short in here, in this mess? You're a bold man, Craig. You're a bold man. It's very messy price action. See how the bodies are still respecting that? Oh, actually, it's closed below that one now. Back up inside the mean. Tough to call this one right now. We've got wicks that have got through it. We've got a body that's traded below it. The body trades above it again. It's really compressing. It's got to bust out of here somewhere. So I'd wait for it to take out a high or a low here. Or preferably this high or this low. And then wait for some new price action to start. See when we went above it again. So you go long again. Come back into here. Boom, right there. Get out of dodge. Go up. How's your oil doing, Craig? See how we ran through that? That's why that became important. We talked about that before. Well, while it was happening, said keep your eye on that. You don't want to lose your profits inside that range. You get an opportunity to get back in sync with it because it's about to go lower. It goes lower. This is the key level you want to watch. You don't want to lose that on the downside. All it did was trade back up inside this range again. Took out this high, created another reversal. You trade below it. Looking at this candle here, you trade below it. You come back up inside it from wick to wick. You come back up inside it, run down, finally take that out on the downside. Right there on the close, come back up, find support at it, and extend the range, take out the lows. So you can't get bullish again until you get above here. But any loss of profits in here was totally seeable right off of there. So we don't get the 6 or the 70, what was it, 70, 76 or 69, 76? 69, 76, I think it was. We didn't get to see that. That was our first indication that we may not get that. You also have a little gap right here as well. Trade below it, come back up inside. See how it ran up? It would have taken your stop anyway. Had you used this one. So you want to see this is just the bear trap. It did not take out the low on a break in market structure to the downside. So all it did was say, I'm going to trade back inside that range high to low. And there's only just 2 candles in a gap. As soon as you trade below it, you come back up inside it right there. That will be your range, your small little tiny range. So you want to see a break in structure to the downside, a nice displacement candle giving you an indication that we're earning back into this range for that. And that's not hindsight. We talked about that before it happened. So above, below, above, below, above. See how it was literally jumping back and forth over these two? And this one here. You want to see that support it now and start going higher. February 10th, he said it would start. Edgar at Hounds, yes, I did. I think it's going to be great. Forex indices and commodities. Not sure I understand what you're saying there, Edgar, but that's obviously between you and Hans. So took out the high, back to that imbalance again. and then slam it all the way back down into that high resistance. And look at that, we're hanging right inside that first presentation still. See how we're banging off of the bottom of it? That's craziness. This is one of those great opportunities to see a high resistance liquidity run day and do nothing about it. Just kind of study it for a little bit and wait for some action. You guys are going to see some fun stuff this afternoon, I think. The afternoon session. This is a good idea for you to go golf and Derek. I'm going to stick around here for another few more minutes and then I'm going to head out. The pre-market was the fun stuff. I managed to get about 300-400 out of the pre-market. And I'm not touching this stuff, so I'm not giving it back either. On X, ITC said that 2025 mentorship would be about Forex indices and commodities. He's actually doing a 2025 mentorship, or was he bullshitting? You keep saying he's never doing another 2020 or doing another mentorship, and here he is lining up another one. Is he running low on cash, or is he doing this one for free? I'm not sure. Hello, honey. You can't. No, they can't see you. Uh, I can. Can you check the reversal for gold? Oh, I certainly can. Yeah, I never got back up into that level I was hoping for. I wanted the carrot to get up there. So we do have a. Let's have a look at this on the 1 hour here. Let's make this bigger. Get this. Oh, I want to see this on the 1 hour first. So we have these highs taken right here. So you look for your reversal. Okay, there's nothing here. So you look for a break-in structure to the downside. If you don't, your reversal was right here, and you want to see a body get through this on the downside, and it doesn't here, but it finally does here and takes out break-in market structure to the downside. You run through it. Now you want to get a retracement back into this low or this candle again to go lower. So usually you want to see it pump up, give it a little kiss, and then down you go. Like at that institutional order flow entry drill right off of this fair value gap here to continue going lower. That's typically what you'd be looking for, but it didn't. It ran all the way down, came back right back up inside that candle, and then went lower. So that would be the hourly reversal inside that range. It's also an optimum trade entry reversal. Fill that fair value gap up. It re-engaged that little inversion that we talk about right there. See how it trades right back into it? That's the reversal. So you have one, you want to see it come back in here. It doesn't do it. It literally takes out that one there. You say, no, I want to see it come back there. And it doesn't. It keeps going. Eventually, it's got to come back into these two. Comes all the way back up, hits them, and you want to see what kind of sensitivity you see it down. It snaps down right below that low again. Then says, okay, now I'm going to take that one, hit that one, run down below it, right there. And then it says, now I run back up, hit that one, now I'm going lower. So now I want to see this and get a close below here. And what you want to see here now is a continuation on the downside. You want to see it get through the mean threshold of this candle. And on the other side of this close and that open. On the hourly. So let's go down to a lower time frame and see if we could have zeroed in on that reversal sooner. So go to a 15-minute chart. And that reversal. Let me just make sure I'm in the right spot there. So we're talking about right here. So that was when at 9 o'clock. Okay, it's like 2 hours ago. So if you want to see this go higher, you want to see a break in structure to the upside. So here's your 15-minute reversal right here. Body trades above it and takes out this high right there on that candle. You don't get to trade back into it. We continue going higher. Back inside this one here, you want to see this get taken into continuation on the upside for running higher highs. It just came back. It filled that little gap and that fair value gap CB right here. And then you look for another reversal. Now that you've taken that high out, and there's a slight imbalance right in here. Like if I pull that open, you'll see it sitting right there. See that? Now that you've taken out a high right there with this guy right here, you look for the reversal, which is right there. You wait for a body to trade below it. It comes back up inside it for continuation. Look at that right there to the money and starts going lower. So that's a 15-minute reversal right there. And you be in on it with precision right there for the reversal. Taking out that low now. You want to see this. If it pumps back up, you want to see it just clip the bottom of these two and go lower. So if that does run back up in here, you can feed off of that and go lower. If not, you want to see that start getting down into, and it's already hit that discount array already. So you're looking at premium and discount. Let me just make this bigger. So inside a range, that's the small little tiny reversal we see right there, and that's the return into it perfectly. And then you want to see the discount array inside the larger range is from here to here, right there. So inside that range, if you get short, you're aiming for here. You got your first hit there. If you get a reverse back into here, you can load that trade on again, come back down into that range one more time. You do not want to see it get back through here on a close. Then you start to look at this candle's high again. Say, do we have a run above here and use these two relative equal highs to go higher? So I don't want to see this continue to go lower. That's a 15-minute chart. So let's see if we could see this on a 1-minute chart at 9 o'clock to see if we see there was a reversal at 9 o'clock. Okay, so here's your 9. We got to get a body trade below here. It does not trade below there. We do have a body trade below here though to confirm. So this is not just a bear trap you get caught in. You look for a market structure break to avoid the bear trap. So if you did and said, well, look, we have a body trade below there. As soon as it trades back into this, I'm getting short. So what's our rule? If we get a body trade above here, we're on the wrong side of that. Your stop loss would be sitting right above you here. In this case, it would have come straight through, bam, and taken you out. You would have been an instant loss on your stop loss. That's the bear trap. Breaking market structure to the downside is what you're looking for. Okay, so you get another high taken. So you have another reversal right here inside this range. And you have this one for a long, and you have this one for a short. If you went, I'm going to go long on that one, then that's the level you say. If it trades below that, my stop loss is sitting here. If it trades below that, I'm on the wrong side of this, and it does. It gives you an opportunity to get your trade off so you can go short because it's heading for here. And sure enough, it heads for there, hits it. It gives you multiple opportunities to get on there one more time before it finally takes out that low. You look for a reversal. You see a reversal here, and then you want to see a break in market structure above a swing point. Okay, it runs all the way above. It goes, oh, good, I'll give you an opportunity to go longer inside that range. And from there to there, you're already at a premium. So do you want to buy this and keep going higher? Now I want to see a good market structure break, and then I want to see that get taken out to the upside for us to go higher. It doesn't even break market structure here. It just comes back into this consolidation CAM model 1 entry. And then you look for this reversal again now that you've taken out that high. See a little swing reversal, takes it out and takes out the low side of the consolidation. Comes back up into nothing, does not give you an opportunity to get there. So you wait for this. And remember this one we were talking about over here. Look, draw it out inside that box from that candle's wick, that little cluster there. You take the wick high to the wick low, draw it out. That's your breaker. Breaker takes it out a whole high here. So when I draw the breaker out, this is one of those models that Michael teaches right there. Oops. See that? Consequent encroachment, schmuck, or the mean threshold. Bodies respect it. Stayed on the downside of the bottom half of that breaker. Work, 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 work. Wicks all support going lower. Bodies are all going lower. Wait for that structure break. Great. Now you say, okay, now back inside this range. I'd like to see this one get taken on the downside. It does right here. You trade back into the low right there. Boom. And then you continue on the downside. So there's all your different structure breaks in gold. A lot cleaner than NQ. So hopefully that helps you. And there you have that. Hope that helped. And then you're back to this. See the difference between those two? You have cleaner price action, and then you have that. Which one do you want to play in, right? So much nicer to read that price action I gave you here. You know, when you're looking at something that's nice and clean. Well, cleaner, not the cleanest, but it's certainly cleaner than see how we've got these levels are cleanly hit, and then we react off them. See how we just that's the PD array. We kick off of it and drive down, or we kick off the breaker and drive down. We get that instant. Okay, we're in there. We've worked it. Now we're displacing down below that fair value gap. That gives us the hint. Guess what? We're going lower because now we've broken that downside. We did not get a body break above here, so we broke it to the downside. Confirmation after hitting the breaker. Away you go. I can see multiple different confirmations on this that was going lower. So that's the deliciousness. So now we're aiming for this box down here on the 15-minute. So if you're a 1-minute chart, you're aiming at that large range. You want to see that get taken on the downside and continue going lower. Or you can play in this kind of muckabout mess. Oh, he said it was free, did he? He is making money from his son for YouTube. Got it. He did say he would be starting a 2025 mentorship on YouTube and X as he has been. It will start in February, as you might expect, since he doesn't usually do anything until then anyway. True, that's true. And it's all for free. Spouses don't get the obsession with trading. They don't. That's okay. We did have a husband-wife team in here once uh, who both did some trading, so it was nice to see them. I haven't seen them in a while. It was Kitty. Remember Kitty? I haven't seen Kitty around for a long time, or her husband for that matter. Maybe they made their millions and left. Edgar, thanks, Darren. You're welcome. It's a bro thing. Yes, it's a bro thing. I'm studying very hard to get your mastery level. Get to your mastery level. You'll get there. You'll get there, Edgar. It's coming, buddy. It's all there, ripe for the picking. We're here every day, hopefully every day. There, look at that. Now we're starting to get some movement. Where's our carrots? Have we got any carrots around? Oh yeah, they're over here. We got this fella right here. So you want to see a body get below here, which we did. The body closed below it. Now you want to see this level here, no more than that high right there. If it starts running through that again, you're back to that crappy high resistance stuff again. So no more than 210. We saw what it looks like in gold when it behaves itself. If it drives through 210, you're still in a high resistance thing. And I still wouldn't want to mess around with this stuff. I'll wait till after lunch. But 210, what's our little Bitcoin friend up to? Still hasn't hit our carrot yet, hey? So let's look at Bitcoin. This is a good example of what we're looking for in gold. It's doing the same kind of similar thing. You see this? See how we've got our reversal right here? Body traded below it. We wait for these two candles to get taken on the downside, right? This gets taken. See the body right there closes below that low. And I like to see the bodies. Some people might like wicks. I don't know. Me, myself, I prefer to see a body trade below that and then use the next candle or the subsequent candles to trade back into it. Now, if it trades into the wick, ideally, it'd be nice to see if it's really got some oomph on it. I want to see that wick, no more than 50% of the wick get taken, all the way up to the open, or sorry, the close of this last down close candle right here. I want to see that, and then I want to see it kick off of there. You could also see that Optimum, the institutional order flow entry drill right here. If it just comes back over, just clips over the top of that last up or this up close candle, the bottom of the fair value gap here, just pop above that and then start running lower. But you've got this whole range from that high to that low it could run back into, which would be a full fill of that fair value gap. Then it starts to get back into the level that you don't want to see get taken out to the upside. There's more strength if it just hits. So you think about this. It's stronger if we hit here, weaker, 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 weakest, and the super weakest is right up here. And then if it starts to trade through the mean threshold of this candle, you're like, ah, you're like, there's nothing. You've lost all the, like super strong would, bearishness would be these candles, these PD arrays down here, hitting support like that right there, and then woof, dropping down, taking out the low. That's like good. Yeah, I want to see that. That's stronger. So those are the kind of things I look for in terms of as that trade starts to unwind, it starts to get weaker and weaker for me. If it's not just a stop run, it starts to get weaker and weaker. If you start eating through all the PD arrays, people tend to reach for PD arrays that are way too high. There's a whole bunch of them in here you got to look for, and then you grade them in your mind on what's stronger, a stronger representation of a position I want to take, and where does that position start to fail. Not only does it, when does it fail, when does it start to get weaker and weaker to the failure point where it snaps and you go, ugh, now I'm definitely gonna, I'm unsure, because if I start trading through this candle and through this fair value gap here, and all I've got is this one here to go short and this one here to go long, I'm starting to get into no fly zone here, right? So that's how I'm kind of looking at those inside that little area right there. Now I want to see how that mean threshold of this wick is where we're looking for. Now you want to see this. See how it's starting to find some support inside that wick? I want to see that start to give way now because there's a little tiny imbalance right here. I don't want to see this low get taken by that wick and then that provide a level of support, because now this candle is my level of, I don't want to see it get above there. Mean threshold, it's holding price right now. We've got a bit of wick coming in here into that candle again. That's it. I don't want to see any more movement back up here. I want to see that continue coming lower now. So that's how I'm kind of grading that hourly bunch of candles. So that you say, now how was that? Do I see any more support of that on the lower levels? I want to see this consolidation here get taken on the downside. It does. Does it trade back into it? No. Well, that's great. That means it's nice, good. This one right here is the only one that, nope, that one doesn't even grab it either. Runs lower, great. takes out that low. Now, do we find support at these cluster of candles right here? From there, there, and there. Comes back up. So draw those out across. They found support inside them. Then you want to say, have we got a break in structure here to go back up, run back up higher? I want to see these candles here get taken on a 5-minute chart to go higher. They don't. They bang off of them. And then what I want to see that uh, imbalance down here start to give way on the downside. It does. Find support, extend the range. Now we've got, do we have a body trade above here? Yes, you do. Now we're back to finding support at that. So now I'm slightly bullish inside that range now. So for me, I have to see these three candles here get taken on the upside to continue going back up higher, which you don't want to see. You want to see it get it above. Where does that line up? There. Yeah, if you close above here, then you're through that high already. You're back up inside this, looking for this again, which is not fun because you don't want to see this candle here get taken. Otherwise, we're back up and you're looking for that as your upside objective again. So for me to go bearish again, I need to get below this candle and that fair value gap there. I want to see it get below that if you want to keep going lower. So then you go down to the 1-minute chart. Do I have support to think that it's going to come down that way? Do I have a reversal right here? Those two candles right there. There's your swing. You come back into here, all the way up to the top of that candle there. See that? Those two candles, let me just make this bigger because on your screen, I'm sure it looks really small. Well, that's a 5-minute chart. Sorry, let me get back there. There's your swing, change in direction, break in structure. You come back up into these two candles. So that's the breaker you want to use because this is a breaker right here, as I see a breaker right there. These two last down close candles are run above this old high here, takes them out. You drop down below that, trade back into the breaker, right up to the top of it, finally drop down below, take out the next. This would be the next breaker right here. Last down close candle takes out this high. You trade through it. Now we're back inside that one. So if you move this one down to here, you trade back into it, drop below. Now you want to see it get through this candle's low right there. It's just freezing on it right now. So you want to see this drop below there on a close, and then we're looking for a run back down into here. And I'd be looking for somewhere around 85, 666, the number of the beast, inside that larger range. Oh, we did hit the carrot. See that? Finally hit the carrot. Now we're getting a reaction off of that. Reverse, taking out that low. Reverse, body trades above it, trades back inside it. You get long. Look for that candle to be taken to the upside. It does, comes back, finds support at it. You're looking for this to run up higher now. And you want to look for these candles to go higher. If we can get back into, oh, look, it's switching up on us. We've got a reverse here. Now you've taken out that high. Body trade below it, right there. Sorry, I just missed that. I was looking for this long. There, see how it's traded below it right there. Now we're back inside this range, back inside that little discount array there. Premium, discount, inside that range, hit it. Now you want to see it go back through the premium range, go higher. Like that. I have no doubt, Edgar, you'll get way better at this than I will. I'm studying very hard to get to your answer. This morning's price action is like hearing a comedian tell the same joke over and over, trying to get more laughs out of that same thing. My monopoly short is working. Where would be the ideal stop loss? For for where? For this particular range we're on right now, right below here, you wouldn't want to see this get taken out on the downside, so you'd be just on the other side of that. We've got this one here on the upside. Stop loss is here. You got your reversal. Body's traded below it right here. You traded back up inside it, so we're back inside this range. You've just hit the bottom of it right here. That's premium discount right there. Now you want to see if it kicks back off of here and comes back up into this range, and you're compressing it back in that same crappy compression. You want to see it trade below here if you want to get lower, right off that low. And I think this is going to be it for me. These guys have been up for a few hours already, so watch there. See how we've already started. Remember, we always give our hints. This is the hint, like it wants to go lower. We've already hit, we've wick through here already. So if we look back into it, running into this candle, roll over and come back down lower, watch. You got this last sensitive candle here and this imbalance, this BISI here. I like this mean threshold hit. Now I want to see that run all the way through here. Take out this hint, hint. If it comes all the way back up inside there, I'm okay with that too. And if it runs through that, then we're back to taking these highs and these highs again. And then you're looking for a run all the way back up into, I'd look for an area of sensitivity around 21,215. Carrie Fish, well done for today. My mind is spinning looking for these price actions. Good night. Go get some sleep, Curry. This is not a place to be playing around in right now. See, we've got this little fair value gap here. All right, so this is where I want you guys to kind of keep your eyes. I'm going to be calling our quits here now too. We've been here for a couple hours, so 3 hours. Now watch it run through here. That was the hint. I think those are the hints. When you see it doesn't just bounce off of that and leave, it gives you a wick through. It says, guess where I'm going to be headed in a minute. Give me a second. When I get a body through there, I'll already tell you I'm heading in that direction. It does. There's your body through. There's your wick back. Give it a kiss and drive through. So I'll be looking for your carrot down in here now. You want to see that this holds price, not run all the way back up into there. No, that's not what I want to see. Welcome to high resistance again. So you got this one and this one providing support off that order blocks. Open right there. Perfect. Off of there. Now you want to see Booker down. But see how we've taken that low? We've got this little reversal here. So if it stops right here and starts going back up again, welcome to the range. You want to see that giveaway right there, right now, not just tap it and go. That's fun. Anyway, so I want to see that for this. If not that, if that finds support there, then you're looking for a run back through mean threshold of that candle and going higher. Look for that imbalance small range here. I like the fact we just digging through it here now. Look for the carrot. Drilling, drilling, drilling. There you go. Stab the carrot. All right, that's it for me. Um, If you like what we're doing, by all means hit the like button, subscribe. We're here every day. Uh, I'll give you more price action. There you go. He's eating into that carrot now. I will be back not tomorrow. I'm leaving tomorrow, so I apologize. I won't be here tomorrow. I'll be on the road driving all day, so hopefully I can get back into see you guys on Friday morning or Thursday. What is it today? Wednesday? Yeah, hopefully I can get back in and see you guys on. No, is it Tuesday? I don't even know. It's this the when you're retired, you don't even know what damn day it is now. It's Tuesday today. There you go. So tomorrow I won't be here. I'll be driving all day, and I'll see you Thursday morning, I hope. Uh, until then, thanks again for tuning in. I totally enjoy hanging out with you guys in the morning. It's my morning wake up. I enjoy it. So you guys are like my cup of coffee and my cup of tea. I enjoyed this. So thanks again for tuning in. I love you guys. Thanks for your attention and for tuning in. I know you've got many choices out there. The fact that you're spending time with me here today, I'm quite honored to be here and sharing price action with you guys. So thanks again. I will see you bright and early on Wednesday or Thursday morning. So until then, all the best to you guys. Take care.